Hello, welcome to Money with Mark Albert. Appreciate you being with me today. Today we're going to look at the Bank of Canada. They had an interest rate announcement today. If getting updates on interest rate announcements is something that's of interest to you, please subscribe below, hit the bell for notifications because I will continue to do this year after year. So please do that. We're going to look at what the announcement was. We're going to see why they made that announcement, both globally and domestically. We're going to talk about what they anticipate probably moving forward, what I think is going to happen there. I have a warning for us, and then at the end I'll make an application on that warning and how that might impact their future decisions. All right, let's get into this right now. So they decided to maintain the rate. So the rate has been 1.75 for some time now. In fact, it's been 5 times in a row they've maintained the rate. So the last time it was increased was back October 2018. And notice in 2018, in yellow here, they had 3 rate hikes. So in the last year and a half, there's basically only been 3 rate hikes. 2019, we haven't had a rate hike yet. And the anticipation would be that we may not see any decline in the rate for the rest of the year. And I'll explain a little bit further. So we'll get into something I want you to be aware about concerning household debt load. It's not mentioned by the Bank of Canada, but it's from me, and I'll make an application at the end. But just after 2 slides here, we're going to get into what the Bank of Canada had to say. So the debt to income ratio, which I've talked about before, and the last time we did the Bank of Canada update. So the debt to income ratio, it's close to around 178% for every disposable dollar we have, which is very high. And in my last update with the Bank of Canada, I actually showed a chart that showed how Vancouver and Toronto are so much higher, but it showed all the other major cities in Canada. So this is just basically the average. It's a bit higher right now, 2019, but that's a good chart that I found here from Statistics Canada. The Canadian press provided that. So another thing I want to be aware of is not just our debt to income ratio, but the household debt to GDP. GDP would be the total amount of products and services that the economy in Canada produces in a period of time. So in the G7, the 7 nations are part of the G7, we have the worst debt to GDP ratio. In fact, see, the second to us is UK and third is the United States. So we're worse than the United States and Japan. And those 2 countries, US and Japan, their total debt as a country is out of control. It's like really, really bad. And yet, our household debt to GDP is worse than everybody. So this is a problem, and it may impact consumer household spending in the future. So let's see what the Bank of Canada had to say. Reasons why maintaining the rate. So domestically, for us in Canada, that basically there was a slowdown in late 2018, early 2019, and as they were predicting, it actually has been picking up since second quarter this year. So the economy, that is. Prior to that, it felt like a bit of a stalemate in terms of the economy, in terms of the growth. So another thing is the oil sector. They're seeing a bit of a recovery there. It's beginning. They're seeing production increases and prices remain above recent lows. So I wouldn't get excited about the price of oil at this point, but you notice it's above recent lows. And the lows that it has been is actually too low to be profitable for the oil sector in Canada, but they're a little bit above the lows that, and production's been increasing. So hopefully there's a positive sign. The household market, so real estate market in Canada, it's more stable, but there's some weakness in some regions within Canada. Globally, trade restrictions introduced by China are having an effect on Canadian exports, right? And that's a problem for us in Canada because China is a big player. And the counter to that is we have a positive where there's been removal of steel and aluminum tariffs between Canada and the US. So the hope would be is we see ratification in CUSMA, and that's what the Bank of Canada calls it. CUSMA will have a positive implication for Canadian exports and investments. So CUSMA is basically the equivalent of the USMCA. So we're trying to ratify. We had the NAFTA agreement between the three countries. We're trying to ratify that into this new agreement, which Donald Trump called it the USMCA, which is United States, Mexico, Canada Agreement. But the Bank of Canada is calling it CUSMA, which is Canadian United States, Mexico Agreement. So it just puts Canada first. Whatever the official name is going to be, I don't know. I thought it was USMCA, but we'll have to see. So the future rate increase or decrease, what we're going to see here, I think that we're going to see either a maintaining of the rate for the rest of the year, or depending if the economy really improves, if certain things improve, we may see an increase. I don't know, but I don't think we're going to see a decline. And these are the three things they're looking for. They're looking for how the Canadian household spending continues. Now, if household debt, that's a problem. So if the economy, if the household to GDP, debt to GDP ratio gets worse, then household spending is probably going to weaken. If household debt to income ratio gets worse, then we're probably going to see a slowing in consumer spending. Keep an eye on the oil market as well as global trade environment. So keep in mind that we got 4 more rate announcements this year. And if this is something of interest to you, please subscribe below. I'd love to have you on all future updates. Thank you so much for being with me today. Have yourself a wonderful day and look forward to speaking with you soon.